So being able to have those conversations and ask the right questions, I think is important as well. So that's why team is also, I'd say, the second most important item.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to another episode of Wealth Strategy Secrets. Today we're joined by Peter Powers. Peter has been with MPI Family Office since its inception. He is a second-generation member of the MPI Family Office and is a principal member as well as the head of real estate. His primary focus involves underwriting and vetting of investment opportunities. Before Peter joined MPI full-time, he was a senior analyst for MACC Venture Partners, a privately held real estate investment firm where he identified, researched, and underwrote multifamily assets. He helped lead over $100 million in multifamily acquisitions and raised over $20 million in equity in less than 2 years. He also worked alongside the marketing team for Capstone Multifamily Group. Peter holds BS degrees in entrepreneurship and real estate from Florida State. And besides his passion for real estate, Peter is a club race car driver and an avid outdoorsman. Peter, welcome to the show.
Dave, I appreciate you having me. Great to get connected again.
Yeah, 100%, Peter. Always enjoy the discussions with you and, seeing what MPI is doing in the marketplace. I think you guys are, doing a phenomenal job in terms of, leadership and being active in the marketplace and, really appreciate that perspective. So before we kind of jump into, getting into some specifics around real estate investing and everything, why don't you tell people who aren't familiar with you, tell them a little bit about your background and, how has the journey progressed for you?
Yeah, that's a great question. Our experiences, our background is what really shapes us. So, when it comes to every decision you make every day, it's just, all those experiences and all those things you've gone through really shape those. So my background, I grew up in Florida, originally from Pennsylvania. Grew up in really a great family. Pretty big, close-knit family, huge extended family. So family was always number one. As I was going through school, I progressed well through school. I did all my schooling in Florida, Tampa Bay, and then I went up to Florida State, and that's where I went to college. Great school, did the real estate program there. I was going down the path of becoming a surgeon like my father. I was going to go down that road, and my family, kind of pushed me away from there, just how expensive it is, and just the future isn't as bright as it used to be to become a surgeon. So they thought there'd be more opportunity for me if I decided to kind of pursue a new venture that my family was starting to really dive into, which was building up our family office and our real estate platforms. So before I fully made that decision, I did a whole series of internships across the country, unpaid internships. My family would tell these groups, prominent groups in Arizona, some prominent groups in Florida, prominent groups in North Carolina, when I could spend several months with each of them to not pay me. I was there to learn, and they wanted me to work hard, really put my nose on the grindstone and better understand what I want to do. So I started in property management with a group out of Arizona, just doing the day-to-day property management, doing some of the maintenance, understanding what consists of leasing and the whole sales component to getting people to rent at these apartment communities. Now, the apartment community I was working at was newly built, so kind of did its job for itself, but it was still a great experience. And then I was also in college at the time, so I would spend my during the school year I'd be doing my studies and doing some research on the side, and then I would I would, do some more internships. So I had a group locally based out of Tallahassee. I had another group based out of Florida that I spent several months with, and then I really, kicked it into gear with this group out of North Carolina, which I spent essentially a full year with before I graduated college. Started, underwriting the deals. And I was ready to rock and roll by the time I, joined that firm. And then I just, kind of progressed up the ranks where I'd find and, underwrite deals, go take a look at these properties, understand the acquisition side of it. And then at the same time, I was bringing my family's capital into these investments. So that really helps me understand, I understood the property management side. I was understanding the acquisitions. And once we acquired those properties, understanding kind of the asset management side, really carrying out your strategies, making sure that everything that we underwrote for, do my best to make sure it was carried out correctly. And listen, you're going to deal with issues. There's going to be things that you did not expect when you originally underwrote. So learning those really strengthened my underwriting and helped me, kind of sharpen my pencil and get a little bit more realistic with some of the assumptions I was making. I mean, they were very close, but there were some areas like if you're bumping rents up by 25%, a few $100, you might have to re-tenant the property. So your occupancy might dip down, things of that sort. So I really got some firsthand experience, which at the end of the day, that's what crafts your decisions. And that's why I was able to, go from there. I came back to my family and, started to lead their real estate platforms. So now we're involved in multifamily, senior housing, storage, hotels, buying hotels to convert to apartments, buying hotels just hold on to. I'm in the process of underwriting a hotel right now. We'll see what we do with it. But if it makes sense as a normal hotel and there's potential upside to convert it to apartments, then it's kind of a cherry on top. So we've been very active in the markets. We've slowed down recently, just given some of the uncertainty in the markets. We're at a point where some of the opportunities that we were acquiring a few years ago, like these hotels out of distress, a lot of other groups have started to get into that space. So it's gotten more competitive and has really slowed down our acquisitions, but it's given us a chance to strengthen our asset management side, which is what we're currently doing.
Yeah, that's great. It's great you've, really took an approach to, see a lot of different things, right, in the industry and then kind of hone in on what your superpower is, right, and where you can apply the most value. I think it takes some people a long time, sometimes many careers to kind of get to that point where you really identify your unique ability, your sweet spot, where you create value, where you're having the most fun. But can you share with us also a little bit about, the history of MPI and, how that's evolved and how has that impacted you and your role in there today?
Yeah. So to kind of back up a little bit. So I was lucky to grow up in a family that, got to do a lot of beautiful things, but we weren't always a family office. So when I was growing up, my father was, just starting his practice, opening these ophthalmology diabetic care facilities on the west coast of Florida. So him and my uncle and my family they were building those up. So he was, very, very successful. It's a great business and still is a good business. But when he was building those up, he wasn't putting money into building up more of those, improving the current care facilities. He was out there and investing the money in the public markets. So 2008 comes around, and as you can imagine, we lost significant portion of our wealth, and at the same time, it was the onset of the Affordable Care Act. So it was a 1-2 punch for us. And instead of licking our wounds, hoping things would get better. We were lucky to have some other families that we were connected with that had something called a family office, where we understood that a lot of them don't rely on, the public markets. They don't rely on these big money managers that, make their money even in up and down markets with the fees they charge. We learned that they kind of had their own financial team. It took them a while to put those teams together, but those teams helped them for their actual best interest come up with custom strategies. And what we saw is there was an opportunity for us to do that, take our money out of the public markets with these money managers to formulate our own family office. A lot of our advisors are in-house, and we have a tax team in-house. We have the acquisitions and the investment platforms are in-house, but we have some outsourced advisors like our insurance advisor. We have another tax advisor that's outsourced, and a few others. we really, formulated that. And it took us a number of years to do that. And we spent, multiple millions of dollars really perfecting that. And, fast forward to 2014, 2015. So a few years after, we decided to formulate a family office, we started making extensive investments into real estate. And the beauty for us was we were getting into an asset class that got beat up, pretty hard by the last downturn. So it was a good starting point for us to start investing. But also, the huge, one of the big incentives of real estate is the tax benefits that paired up with our operating businesses, which we still own, primarily the diabetic care facilities, really helped us propel our wealth back to and beyond where we were in 2008. So, fast forward to now, we own several thousand apartments across the country. We own a few, probably almost 24 hotels. Some of them are converting to apartments. Some of them we're holding on to as just normal hospitality assets. Another dozen senior living facilities and a number of other real estate assets across the country. So, we've really started to take a more active approach in our real estate over the last 5 years, where we're, doing straight joint ventures, and we're, co-asset managing these deals with our operating partners. That's primarily how we go about doing our investments, is through strategic joint ventures with groups that show, track record and experience in given geographical areas with given strategies. So we partner up with them, sometimes provide the majority of the equity, sometimes it's just a piece of the GP side. We call it a co-GP model. So it really does depend. The beauty of being a family office is we're flexible. So we're able to go in there, structure the deal how we want. Some deals are more long-term, some deals are short-term. That's kind of where we are now. And then the next chapter, this is what you and I were talking about before we got on this, was our consortium of wealth side, where, we're a little bit different. My parents came from nothing, and, were able to propel it to something, very impressive over the course of, 40, 50 years. We've opened our doors to our family office to share our strategies, share our advisors with other families, other family offices, other entrepreneurs with fast growing businesses, to help them get to a point where they, don't necessarily have to work those long hours in order to keep up with their lifestyle. They're able to put money aside in other investments that make money for them so they can enjoy their lives. And a lot of them love what they do. So it just takes that pressure off of them. They can go to the office if they want. They don't have to go if they don't want to. It just gives them more flexibility, lets them live out what we call the ideal dream lifestyle. So I think it's very important for a lot of people. And if you ask me, that's what the American dream is. It's different for everyone, but what is your ideal dream lifestyle? And figure out a way to structure your life and your investments so you can live that lifestyle.
Yeah, I really love that, Peter. I know it's really interesting that a lot of people just fail to spend enough time kind of creating their own vision statement and what is that lifestyle they want to do. And I guess it is challenging, right? In today's world, we live in such a reactive world with, different, whether it's the news or the media or just being inundated by information and activities. So we're always in the state of being reactive. But I think when you can do some deep thinking and really understand what that ideal lifestyle is, that vision is, it really then becomes, your guiding North Star into the life you want to live, right? And also gives you the inspiration to be able to get there. What would you say in terms of, MPI? Do you guys have a kind of particular wealth strategy that you follow, some things that you're doing, from kind of a strategic perspective as you look at the world?
It's a great question. We have probably 24 fundamental strategies that we abide by that have really helped us propel our wealth and helped us. My father's 54, was able to retire because he has investments in all different types of businesses, including real estate. And he's able to live his ideal dream lifestyle, which for him is to travel with my mother and race cars. That's what he does for fun. So, it really is unique given what what a specific family wants. So some people, they live more modestly. They just want to be around their children, their grandchildren, and they don't have to be traveling all the time. They just want to maybe just relax. So it really is, it's customized, really depending on the family. But for us, we see a lot of opportunity and a lot of potential with our real estate platforms, just because we look at them as operating businesses. We believe operating businesses is being able to learn and formulate a team that really understands a business and can add value to that business, buying those businesses, building them up, sometimes selling them off, sometimes holding on to them. It's going to allow you to do whatever you want to do, live that ideal dream lifestyle. So I would say our real estate investments have helped us do that. So if there's one strategy that everything else kind of revolves around in some manner or is connected to, it is our investment strategies, which is kind of our workforce, affordable housing, private pay senior living, and our hotel conversions. That's what has allowed us to get to our ideal dream lifestyle.
Yeah, it makes perfect sense. So maybe we can then jump into, your buy box, a little bit more specifically on the, acquisition side. Do you have a particular, buy box or strike zone that you guys are looking at to really filter opportunities? I'm sure you're seeing opportunities all the time, especially in this market, right? There's going to be some fire sales potentially, kind of looking at opportunities, but how do you filter all those down? How do you decide what you focus in on?
Yeah, so we're unique in the sense of when you buy, whether it be real estate or some other business, it comes down to who's the team. So how we look at all investments, and I touched on this a little bit, is we do all of our stuff through most of it, 99% of it is through joint ventures. So number one, we get sent a lot of deals. I get sent deals organically all the time from brokers, from owners, from all different, you name it. We've received a lot of different deals from different sources. So we have pretty healthy deal flow, but we also get a tremendous amount of deal flow from our owner operator partners, which right now we have probably a dozen that we actually invest with. We have another probably 5 dozen that we're in some process of getting to know them, but that's out of the thousands and thousands of operators that we've looked to work with. So what we have a process of what we're looking for, and our criteria, we call our non-negotiable criteria for our operating partners. So one, touch on this a little bit, is the experience. We want to be able to see that they have a track record, not just in the investments that they're doing, but also in debt cycles, understanding the debt leverage can be a beautiful thing, but can also bite you if you don't structure it correctly. So being able to understand that gets into how transparent are they. We do joint ventures. We want to be able to follow the money. We want to be able to have access to all the reports and the different systems and softwares that we need access to. Then it's going to go to, are they actually aligned? Are we swimming in the same direction? Are they investing skin in the game? That's very important to us. And then getting to know their team, how the team works. Usually every team's like a machine. How does that machine work? And then, are they willing to do the joint venture structure? So that's what we look at first. We, we do, different interviews, getting to know them, meet them in person, understand maybe some of their past deals. We'll have some discussions with some of the references. And then once they check up all those boxes, we'll start looking at opportunities with those groups. So what we're looking for in opportunities, our 3 main buckets right now are affordable workforce housing. That has primarily been through our acquisition of LIHTC properties, low-income housing tax credit properties, as well as our hotels that we're converting to apartments, and then some of the conventional apartments that we're buying that we call them little a affordable. They're not restricted, but just the renter profile and the rents, make them more affordable workforce housing. Then we have our private pay senior living facilities. So that's everything from independent living to assisted to memory care. We're not investing in nursing care. That's a pretty strenuous and regulated business, so we stay away from that. And then we have another platform, some smaller platforms, our storage, our just conventional hotel business. We're buying hotels at distressed prices. Like we just acquired one in January. We acquired it at 6.25 million, and it's already kicking off $5 million of revenue. It was appraised at 30 some $million. We bought it out foreclosure. So we look at opportunities like that. So we're very opportunistic, but we really like housing through affordable workforce as well as the private pay senior. So we look for opportunities that fit those boxes, and then we're looking to get into investments that are already cash flowing in some manner. So we look to get into those investments that can already service the debt, and we look for ourselves and for our operating partners to infuse value. Maybe that's through operations, maybe it's through actual renovations. It just depends. But we want to make sure that we're buying this asset right. It already can, kind of service itself. It's already operational. And then we want to make sure there is a component where we can add value. We're not just buying something at a good basis. It needs to also have an opportunity for us to increase the value of it. And then we decide from there if we want to hold on to it or if we want to liquefy it in some manner, maybe sell it off, or maybe we refinance it or we recapitalize it with some other capital.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com. Yeah. Can you speak to the fact about, timing in terms of the investment horizon, right? Because I think that we're all kind of inundated, right, with Wall Street and the particular products and offerings that come out of there.
Yeah.
And I think what it does is it actually arbitrarily forces people into this reactionary state, right? Which is, this week it's, the failures of SVB, and now, is that contagion going to spread right into the banking system? And so people get very reactive, right? And they might want to think, I've got to dump, stocks in this sector. I've got to make a move, and kind of almost more points you towards, that trading kind of mentality and changing all the time.
Yeah.
But what I found unique about, family offices, ultra high net worth individuals, right, is really kind of investing for the long term and having that, strategic kind of philosophy. So can you share your thoughts on how you guys are implementing that?
Yeah, so I think at first it starts with systems. So with anything, you can get emotional, but if you put a system in place, and regardless if it's good times or it's bad times, because you can be emotional on the upside, emotional on the downside. You can get too excited about something or too nervous, and you'll make decisions. You need to build a system out where if you come across some decision or opportunity, you run it through that system, and the system gives you the answer. That helps you look at it, focus on the main points that you put together previously, and not just make some rash decision. Makes you go through the system. So that's number one. Then number two is when you're actually making that decision, make sure you structure it the right way. So if it's an investment that you're making, you want to make sure that if you're looking at long term, which we like to look at, everything needs to have some type of long term focus, right? We need to structure it that way. And I think you're seeing with a lot of people is maybe they bought great investments, but if you structured it with short term debt, you might be forced to sell that asset before you can actually realize the value that you initially saw when you underwrote it. That's a problem. You never want to be forced your hand. So we focus on that, as well as how flexible are we? You want to keep that flexibility. You want to have an idea, a business plan in mind, but you want to be able to have that flexibility. If you need to pivot, you got to pivot. Now you're starting to see a lot of issues in the office sector, which some areas it's better than others in terms of cities, but long term, it's probably not the most attractive place to be in. But a lot of these groups are being forced to, have to hand over the keys because their debt's expiring. They weren't as flexible. So I think that's the issue there, is if maybe they had another 3 to 5 more years, they would be able to see, it might be a little bit more clear to them what opportunities are still on the table for them, to maybe not hand over the keys. Maybe they still have to hand over the keys. Maybe they convert it to apartments, which is very hard to do. It's not that easy. We'd like to think it would be easy, but it's pretty hard to do. or maybe they come up with some other concept. I don't have a crystal ball, but flexibility, time allows you to make better decisions. You won't be forced into a corner to just make a decision. So building those systems out and then structuring it in a way, maybe it's your equity, maybe it's your debt, so you're flexible and can pivot after, doing the due diligence on the decision you're making.
Yeah, really great insights, Peter. And then what do you think in terms of, at the time of this recording, we're in mid-March 2023. Where are you seeing opportunities this year? And what areas are you also staying away from?
We are focusing on what we know. We're staying away from areas we don't know. I see a lot of bright people that are starting to invest or putting more effort towards grocery anchored retail, for example. That's a pretty interesting business. I don't know it well enough. I need to learn about it, but I don't think this is the right time for me to get involved in it. I'm not going to try something new. So that's number one, is staying focused on what we know, because one, we're gonna come across issues, problems on the stuff we already own, we've already invested in. If I understand that business, I have the right partners, I'll be able to make a good decision on what to do. I'll have more potential solutions. If I'm in something that I have no experience with, we're going into a tough time, I'm not going to be able to make the best decision. So I want to focus on what I know, both in new opportunities as well as the existing stuff we own. So that's number one. That's what we're looking to do, is focusing on what we know. We're staying liquid, so I think that's very important. Liquidity, as we're seeing with these banks, you gotta be liquid. Make sure your portfolio is structured in a way where if there's opportunities, you can pounce on them, and if there's some problem childs, that you're able to resolve it. So that's something else we're focusing on, is staying liquid.
Yeah, good point. And what would you say in terms of a liquidity strategy? Because this is actually a pretty interesting topic, especially, again, as we're in the midst of, this fallout with SVB Bank, right? You would think that, the bank's got the most liquidity. I know you guys are a proponent of leveraging whole life insurance as well as part of a liquidity strategy. But can you talk to any specifics around liquidity strategy, cash equivalents, kind of how you're managing that?
Number one is having a cash cow operating business. So we still have our diabetic care facilities, across the west coast of Florida. That's kicking off cash flow. I don't care if we're in an up cycle, down cycle. People still need to go there. Diabetes is the number one cause of blindness. So that will most likely always be there in some extent. Eyesight tends to deteriorate with age. So that is still kicking us a lot of cash flow. That's allowing us to, keep our lights on, keep our operations going, and, be ready for more opportunities. So that's number one, is having a cash flowing business. Number two, I would say, is having a team. So having a team that is best in class, that comes to your tax team. So if you can save a tremendous amount of money in income taxes, maybe you're paying a lot of money in property taxes like we do with the real estate holdings we have, and the payroll taxes with all of our the employees we have. But if you're able to save money there, you can then go reinvest that money or hold on to it for a rainy day. And then there's other advisors. Protecting yourself. We have a few families we know that are 8, 9 plus figure families that are going, they're going through some challenges where they might lose a quarter to half their assets. So being able to structure yourself correctly there, where you might be liquid today, but if maybe it's some business problem, maybe some marital problem where you lose half your assets, it's going to affect your current position. So structuring yourself correctly there with the right asset protection strategies is important too. Maybe you have a bad deal, and maybe that bad deal is the one that has the recourse financing. We stay away from recourse, but we know a number of groups that might have 1 or 2 deals with recourse financing. That could affect you as well, affect your liquidity position, where we're in a tough time. Maybe these banks that maybe you have non-recourse debt with, but you still have to keep some type of liquidity. If you have something else eating away your liquidity, that could trigger some other issues in other places. So being cognizant of that, being cognizant of we're in a few funds, we have some limited partner investments, then we have some other investments where it's straight joint ventures, but what if there's capital calls in these investments? What's that language read like in all of our operating agreements? It's important to understand that. So really buttoning down the hatches of worst case, what liquidity needs to be, put aside and what could potentially happen. Having those uncomfortable conversations with maybe the groups you're involved in needs to happen. And so those are some of the things we're doing. We're having those conversations, figuring out, where are we? How do our cash flows look? Is there any scenarios where we might have to put some more money into this investment? So being able to have those conversations and ask the right questions, I think is important as well. So that's why team is also, I would say, the second most important item.
Yeah, that's really solid. I love the proactive approach as well. Really thinking about this ahead of time, right? Before you're in that situation, like, that you have to react, or like you talked about earlier, right? You're making that decision, and you're kind of forced up against a wall. So it's going to be a bad decision, right? Because it's short term, but being proactive in nature with these things really helps mitigate, some of the risks and put you in an opportunity to win.
Yeah. Yeah.
So Peter, if you could give just one piece of advice to our listeners about how they could accelerate their wealth trajectory, what would it be?
One piece of advice. One piece of advice to excel in your wealth journey would be education. So education is very important. To my family, to myself, I'm always reading. I'm always, while I'm working out, even during the day, I'll find myself an hour and a half, going through some financials and something. Always just educating myself. What is this? Why has this happened? What could this lead to? That's another reason why part of our consortium of wealth, we're building up an education platform, not just for building wealth, but also preserving it, because it really does start with, or it can continue with the upcoming generations. So helping them understand, what is money? What is the value of money? The velocity of money. Some of these concepts that you might not learn in traditional schooling, helping them understand that. It's a lot easier to start them, maybe when they're, early teens about this, maybe even a little bit earlier about some of these concepts than after they've gone through their formal high school and university teachings. Because at that point, they probably have a lot of stuff ingrained in their mind and have a lot of these other opinions, which, again, it's great to have some of these opinions, but it's just harder to penetrate their ideas of certain concepts, coming in, 20 years into their lives. So starting at an early age, educating, helping you understand the value of money, how to make money, how to run businesses, experience hard work. Those items are very important as well. So I always believe education is number one, but it's very important to understand where that education is coming from. It needs to come from all different areas. You need to understand, this perspective. You also need to understand that perspective. And it's not just reading it and then going and doing it. You got to come up with your own ideas. You take all that, you compare them, you contrast them, and then you make your own opinion on it. And that's where experience comes in. You carry out that opinion. It's kind of like a hypothesis. You come up with it, you then test it and see how it works. You might fail at it, but failure is the ultimate teacher. So that's what allows you to ultimately make better decisions. So going out there, making big decisions, failing, getting back up and making another decision and finding the successful solution is, that's what education is all about. So that's what I tell people. Just keep educating, keep reading, keep meeting people. Relationships are important as well.
Yeah, 100%. That's a key phase in our overall wealth strategy, is really trying to increase your financial IQ, your mindset IQ, your relationship IQ, and also your health IQ is part of that. It's really key to accelerate that. Peter, since you're into race car driving, it was interesting. And speaking of reading, I was doing some one of the publications I like, Wealth Research Group, Leor Gantz. He was funny. He was talking about today. He's done some simulation, F1 simulation. He's been doing for a while, and then he made a correlation to the way the Fed has been reacting to things, right? And it's kind of like, they're basically putting on the brakes or accelerating, past the fact, right? Too much later. So I thought that was kind of an interesting analogy, but have you learned anything from, race car driving? And I've had to, the opportunity to do a couple of experiences myself and race. Super intense, super fun type of experience. But have you learned anything from that experience that you've taken into, your investing philosophy?
Yeah, I think the number one thing from the racing is the relationships. So I've gotten to meet some very prominent business executives, some large real estate players from my just, going to the track, renting out the tracks. That's number one. But obviously, get the education component of it. What you see, it's funny, is you'll see guys go out there in some of these lower powered cars and they're very successful. Then you'll see a guy come out in these, high horsepower, crazy, mobiles, and they'll go out there and they're going slower. Well, why is they go out there, they're just too aggressive. They don't, sometimes you'll see it with some of these guys, these very expensive $500,000 cars, that their egos get involved. So learning from that, seeing what egos can do. And then you'll see some of these guys that are very successful, but they'll come out there and you could tell that they really value education. Yeah, they are very successful in this sphere of their life. But when they're coming to this, and it's a little bit newer, they don't have that much experience with it, they're opening to learning. And they progress, a lot faster than some of those other people that might be successful in this sphere. And I think that it translates over to a different field, which is, it's a risky thing to do. You wreck at 100 miles an hour, 200 miles an hour, you could possibly die from it. So seeing some of that from people, understanding that they're very successful, yet they hold themselves back and they want to learn, and then they take some of that knowledge and progress a lot faster. That's a great path. Being able to humble yourself in something you might not fully understand, learn, and then take action, I think is very commendable. So I've seen that. So that's something I've learned. I would say those are the two biggest takeaways from racing: the relationships as well as staying humble, because there's always a lot more you can learn, and just because you're good at doing this doesn't mean it translates over to that.
Yeah, excellent insights, Peter. If folks want to get more in touch with you, they want to learn more about what you guys are doing at MPI, what's the best place, Peter?
The best place, by LinkedIn. You look up my name, a pretty unique name, Peter Powers. So look me up on LinkedIn. You'll see me on there. Reach out to me. I'm on there at least once a day, reviewing different articles and connecting with people. So I think that would be the best way, and we can share contact information over LinkedIn.
Awesome. Really appreciate your time today, Peter. I know you've created a phenomenal amount of value for listeners. They're definitely going to love this episode. So encourage you guys to reach out with Peter, follow and connect with him, and look forward to the next time. Thanks again.
Dave, I appreciate your time. Thank you.